We'll take a look at Bitcoin today and have a look at some of those key price levels above us and below us so we can decipher where we are in this current trend. Quite a few of you in the last video that I did seem to like the trading setup, so I'll also give you some trading setups so you can look for both to the upside and to the downside and give you those different setups so that you actually know how to trade these markets. If I can show you some of those key levels that you can take trades for both to the upside and downside, give you some more clarity, that's my job. Your job is going to basically be to give me a big thumbs up down below. So give me a thumbs up down below and subscribe to the channel if you haven't already. So let's get into it. Two key levels above us and below us are pretty clear. So we've got floor support at 30k, which is the obvious support right at the bottom of the range, which I've marked out. And just below where we are currently, okay, we're at 42.2k at the moment. We've got our big support over here at about 40k, which I expect us to get a reaction should we drop down to that level. Also at the minute, we're coming in and retesting the 21-day EMA. So around this region over here, okay, I'm still expecting BTC to get some sort of bounce at this level or pretty soon. Now the key levels above us are obviously going to be this area that we got rejected from last week, which is about the 45.5k region. And above that, we've got really the area that we haven't been able to get over a couple of times in December, which is that 51k region. Also bear in mind that the weekly 21 EMA is also coming in at the area that we rejected at about 46k. So this is definitely an important level to look out for. So if we get rejected from there and we move up here again, okay, then we're looking to potentially still move lower. If we bring out the VPVR, that is also giving us confluence. We can see that the lowest volume areas are the areas above us that we've marked out in red, and the areas of support that we've marked out in green are also in confluent with some of these lower volume areas. Now, you know me, I'm going to tell you as I see it and be as clear as I possibly can with you. So to be honest with you, I'm not entirely clear that 33k is the low. My current bias is that this is an intermediate low unless we can start reclaiming some of these higher levels. I do think current price action at the minute is fairly unclear, and we don't have a strong directional bias either to move up or to move down. But what I can say is that the move that we've got over here from 33k to 45.5k is a much better move than we got at at about 44k and about 50k, 48k back in December. But at the minute, this to me is still an oversold bounce, and this would have been the bounce that I would have expected a little earlier if I'm being honest. So I'm entirely open to the possibility of us moving lower than 33k, and if we do move lower than 33k, obviously I'm expecting some buyers to step in at some point at about that 30k region, no doubt, but I would not be surprised if we undercut these lows. I do think reaching 30k would be too easy. I think you can trade this, okay, but this would be too easy. What you really want to create some sort of bottom would be to create some mad panic in the market. So if we do drop below this, I wouldn't be surprised to undercut these lows at about 30k and move down to some of those mid 25 targets. Adam loves your kids, he loves your family, he loves you, but more importantly, he loves making money. So I'm going to tell you how it is and how I see it. So let's not beat around the bush. If we break 33k, we're probably going lower than 30 in my opinion. Some of those targets that we spoke to the downside below that, if we take some of the extensions of the major waves, we can see that we're getting a 1.618 from the liquidation move down in December at about 26,000. And you can see as well that if we take a fib extension from that wave down to the bottom, what do we get? We get a 1-to-1 at about 25,000. So look for that 25,000 area as an area for buyers to step in if we undercut that 30k level. As I said to you before, my base case is that we will bottom out at some point below 30, but above 20k. I'm still not sure that we take out this 20k high and move below that, because Bitcoin has never moved below its prior cycle peak in the past. So that is going to be my base case for the moment. Moving into this region over here is more than enough to cause panic for people to basically absolutely lose their shit and make them think that it's going to 14k, but in fact it won't. Think about it like this as well. If we got diminished returns to the upside and we didn't quite reach some of these loftier targets where we would have expected to exceed 69 and maybe make at least 100,000, it would also make sense to me that we don't have to go down to 14,000 and have an 80% drawdown. So let's take a look at some of the long setups that I'm looking for this week and how we can still play this market even though we're ranging sideways. I'm looking for long positions at about that 40,700 level. You can see that we have this rising trend line over here to contend with, okay? Look left and you can see that we've got these areas over here, which should provide pretty good support and where we've bounced from in the past. So this is the green band that I've marked out. So if we do make it somewhere down to this level over here, okay, I would be looking for longs. This is also currently where the 21-day EME is at the moment. And in Confluence as well, we do have a CME gap at about 40,700, 41,000 area. So just look for that area as an area of confluence for long. Personally, I have an order in at about 40,700 around this area over here. And my stop loss for me is going to be about underneath this 39,600 area. So that's about over here. If we move any lower than 39,600, we've typically moved down pretty quick in the past. And then that means that my idea is wrong and I want to get out the trade. So we'd be looking for this to bounce somewhere into this region, okay, at about 44,000. That will be the trade that I'm looking to take. I typically like taking trades that give me a stop loss of around 3 to 8%, 3 to 10%, okay, and then target somewhere around like 10 to 15%, or maybe even slightly smaller than that. But really, I'm looking for about a 2 or a 3 risk-reward return ratio. They're the sort of trades that I look out for. So at the moment, if we were to enter about 40,700, my stop loss would be about 4%, and I'd be targeting somewhere around these highs over here. Like I said, look left and you'll see where the resistance is over here into this region. So anytime I make a 2 to 1, I start to take profits off the table. For those of you that are looking to take slightly longer term trades and longer term swing trades, and you're a little bit more bullish on the price action, and if we do move to about that 40,000 level of support and you think that we're going higher, then I think you can take a stop loss and put it down below here at about 12%, but you would want to be targeting somewhere up to the next range at about 20% at about that $50,000 level. The other bullish scenario that I'll be looking for is that if we do break over here at these highs that we were at last week and we move into this zone over here, okay, big push up, and we come down, retest the $45,000 area as support, okay, and then start to swing this higher, that's another long setup that you can look out for. But you want to wait for the confirmation over here where we get some kind of bullish reversal candle. You take that and then maybe you put your stop loss down below here and make sure that you have a good risk reward ratio of about 2 to 1. So those are the long setups that I'm looking for this week. Bear in mind that we do have a Fed meeting today, which, although I don't think has a major impact on the kind of macro trend of where Bitcoin's going, it can sometimes create that volatility in the market, which sends you to either levels, both to the upside and to the downside. So just watch out for that. Now, whilst I think that's obviously a good trade to take for BTC for the long side, and that's something that I'm looking at, if we do break down, then you can take some short setups. So if we move down to this level and then we break 39.5, move a little bit lower, look for a back test of 40K. And if we get a rejection there, okay, that would be your entry candle. My stop loss will be somewhere above over here, and then I'd be targeting these range lows down below us. But make sure that you wait for the actual market structure to show you the breakdown and show you that it's trying to retest an area, and maybe you get some of those big wicks to the upside to give you confirmation that you can expect to move. So those are the key levels that I'm looking at the moment. 40K support if we drop. If we don't, then I'm looking for a back test of 40K to move down a little bit lower and retest the regions that we were at 2 weeks ago at 33K. Be very selective with your trades at the moment, because BTC is not showing us like a whole deal of clarity, because this move that we're at in the minute could easily be a dead cat bounce. Even if we move up to that 50K region, maybe trap some people, move lower, it could definitely be the bounce that sends us higher into new all-time highs. But you just need to be aware of that at the minute, that there's definitely the possibility that we can move lower as well as move higher. Back in 2018, when I was in the market and we were in like a major downtrend, I've seen major moves of about 60, 80 to 100% even in big downtrends. So definitely something that you want to be aware of. The other two short scenarios that I'd be looking for at the moment would be another retest of the 21 EMA, which again is going to be somewhere over here. So if we get some kind of swing failure pattern, big daily wick, and the sell-off looks a little bit harsher than this, then I think you can take this as a short, put your stop loss over here at about 47 up into this range, and then take this down to the downside. Bear in mind, a double rejection on both weekly candles of the 21-week EMA is telling us that we don't want to move higher than that. And generally when we're in bear trends or bear markets, the 21 EMA on the weekly is definitely an area where we look to basically continue our downtrend. In the event that we do move higher than last week, then I'll be looking at, the next area of resistance at 51k thereabouts, where again, I'd be looking for shorts over here into this daily bearish order block over here at 51k, and then you could enter at about, say, 51 and a half, somewhere in that region, put your stop loss over here, that's your invalidation, and then swing this again down to the range lows. Also look out for a swing failure pattern of these prices over here, where we might wick up for an hour or for a day, and we don't get any sort of significant push through, come back down, we get that rejection, we get another little move up, and then that again, that move up there would be your short entry, where you enter over here, okay, and your stop loss would be above that swing failure pattern if that was to occur, and then you swing it to the downside. So those are the two short scenarios that I'd be looking at about that 51k level. If you like what you saw today, please go ahead and drop me down a like below. It really helps me out. Subscribe to the channel. I'll be coming out with more videos this week. Until the next one, peace out.